Rotation, rotation, rotation. There's really no other way to say it. We're going to go through this in some great detail. But you're seeing the 5-day, the 20, the 50, and the 200. They're all rotating down. But what's so interesting is when we compare this with the advanced decline data, you're getting some really mixed results here. And I think it's because of the rotation into certain sectors and also subsectors. And we're going to dive into that. We also have the FOMC tomorrow. And you can see right here, it's the 2 days. And we have to watch this. We have to watch this really closely. He's got to thread a big needle. A really big needle. It's probably the biggest actual meeting that he's had all year long. You might want to jot these others down. All right, let's get to it. My biggest concern to start with the breadth is the fact that they're all following in line. They're all rolling over. And the question really is, how long can this go on for? It can go on for a while. We just have to watch to see if we can get back down here to this 5-7 level. And is it going to happen fast or slow? But you're seeing deterioration. What I'm trying to figure out is where that flow is going, because it is going somewhere. And this is exactly what I think is happening. Now, we're going to have to watch this super closely, but in front of you is the NDX. This is obviously the NDTH, which is NASDAQ 100 stocks above the 200-day moving average, which is over 63. And this is the NASDAQ 100 names over the 50. And you can see that's at 74. It's my belief that they're rotating into NASDAQ, but not just NASDAQ. They're rotating into some of the beaten down NASDAQ names. I'll walk you through which ones. As always, subscribe to the channel, click all notifications. 27.5% of you that do watch this over 30 days do not subscribe. Let's get to it. There's a couple of things here that we just want to point out. This is year over year. It's not month over month, but we can obviously see where we are right now versus where we were previously. And I just do think it's important that year over year retail sales, this is the lowest number we've had since the November election. And we were obviously moving up into that. And then, of course, you can just see the uncertainty created here is just starting to drop these numbers a little bit. And then we had this fall off today. And if you take a look at that fall off in relation to some of the other data, it's definitely worth paying attention to. Now, while this data, it's not exact, obviously, because you have different months, but it is important to get a sense of it. So if we look at consensus on the month-over-month, you were at 0.7% negative. 0.9, so that's not great. I don't really get into exports and imports, and the reason for that is because of all the uncertainty with tariffs. But retail sales control group, month over month, consensus, so you were a little higher. Previous was negative. But if you take out autos, meaning just retail sales without autos, you were expecting a positive number and you came in negative. And I think that's important. So if you didn't have autos, retail sales were down, and previously they were higher. So that's declining. And as far as import prices, export prices, I don't really pay attention to it. What I'm just looking at are the simple things. Like the retail sales X, if you took out gas and you took out autos, you're negative versus being positive month over month. Retail sales, 3.35. So you are seeing weakness. And we are going into some economic data here tomorrow ahead of the FOMC, and we do need to talk about it. Now, obviously, we never know how this stuff plays out. But tomorrow, we do get the building permits. Initial jobless claims, 248, 245 consensus. So you have this actual right in here. And what we don't want to see is anything in here that's going to be like a 250. We don't want to see anything in here that's 250 to 275. Could that happen? And the answer is yes, it actually could. And you have a consensus of 1940 tomorrow. And what's important about this is the consensus. This is the highest consensus you've had, period. And I'm going to show you something about this consensus. And this is 1956 right here. This is continuing claims. These are people that are continuing to file claims because for whatever reason can't find a job or whatever the reason being. This is really important to get. Not so much the 4-week average, we can focus on that, but is this increasing or decreasing? And again, remember this 1940 and this 1956. Now tomorrow at 2:30, obviously we're going to get a dot plot tomorrow as well, being June, but that just tells us exactly where all the Fed chairmen are, or I'm sorry, where all the Fed members are and where they think rates are going to go. And sometimes they're all in one spot, and sometimes they're all over. And that dot plot probably tomorrow is going to read like an EKG. It's probably going to be, we're going to be all over the place, quite frankly, in my opinion. But we'll see. I do think we're going to be all over the place in that dot plot. And I think it's going to have a bigger move on the market than we think. Fed has a dual mandate. Simple. Keep inflation down and keep people employed. So the goal is keep employment up and inflation down. That's their dual mandate. It's really that simple. And keep inflation down. Keep people employed. Very, very simple. Right now, inflation is plummeting. But as inflation is plummeting, with the uncertainty that's going on out there, claims are kicking up. And a lot of people don't really look at claims because they haven't had to for some time. But if we took a look at this on a 3-year average, or a 3-year chart, This is where you're at. And yeah, you've had some rises in here and then you've backed off, but you have that trajectory that's obviously going up. What I don't really like about this is right now, this previous level right here and this previous level, all these levels that were coming out that we were watching, we didn't have anything that even had an estimate that was even close to that number. Nothing that was even close to it. So now we're getting estimates that are higher than the 3-year. And that's a concern. And to put this and just look at this over at 1 year, take a look at this. And I can't stress it enough. If this continues, this is why retail's weak. This is why the XLY names are weak. But watch this. And I think when you look at this over a year, it really puts it in perspective on what's going on. Now, maybe it'll surprise us. But if we looked at this and people say, well, it's not that far off. If you really just went and looked at it and said, okay, well, here's 186 coming across and dropping that. How many 186s did you have versus, and this comes out weekly. How many 186s did you have that were over versus where you're at right now? And it hasn't happened. So it's not even just the fact that you're at a 3-year high. It's the trajectory in which you just got to that 3-year high, which I think is the problem. And I don't think people are getting that. Now, we went over this very quickly yesterday, and I'm just going to just refresher because it's actually getting worse. In other words, if you look at where we were a day ago, we were at a 97.3% chance. Nobody thinks they're cutting rates tomorrow. If they cut rates tomorrow, the market will rally and they will buy bonds and yields will drop. They will plummet. It's not going to happen. So then that falls into two spots. We have to worry about two things. Number one, we have to worry about the dot plot. Number two, we have to worry about itchy speech. The one thing really is itchy speech, but then again, you also have the dot plot. And for those that don't know, it's just market or member participants of the FOMC. And they talk about where they see rates. Just up here, it's exactly what it is. Where do they think rates should be? Midpoint of target range on target level for federal funds. Where do they think it should be? And so you can see this here and how everyone will be in one sector. This is actually last dot plot. And then you actually just have the numbers over here. Some people say it should be at 405 or 450. And then if we came across, you have some that are saying it should be at that 375 to 350 range. So you're kind of in that range here for 25. And then you go to 26 and you would have 26 come across. And then you could see how you would start to here. And then that starts bringing it down. And what they're doing on every one from 27 on down is they're just dropping it down. But what happens here is you'll start seeing that you start getting more scattered. The further you go out, the further this goes out, the more scattered it gets, the more uncertainty you create, right? So what they're going to be looking for is this pattern for 25. Is it more scattered? And this is how you should think about it. Is this pattern more scattered or less scattered? So tomorrow when you're trying to figure out, does the dot plot do something or does it not do something? Screenshot this. And if the dot plot is higher than this 450 on anybody, you have an issue. If they're more scattered, that the easiest way to say, the dot plot's out and we're more scattered, if we look at something like this versus this, that usually leads to uncertainty because they're all not in agreement. And then we tend to sell off in equities based upon that because of the uncertainty. Market hates uncertainty. So we do want to watch that. The second thing that we really have to watch, and I prefaced this with the first thing, what is he going to say about increased inflation? Because he has to answer the question. It's a valid question. What are you going to say about decreased inflation, and increased in the claims? You have a dual mandate. You've handled one and you're worried about the other. Is he going to be late to the party? I actually think he's in a tough spot. I don't know how he's going to deal with this, with what is going on with tariffs. I think he's in a real tough spot, and he's got a needle to thread tomorrow. But that could really lead to some downside. Whether or not I respond, I do read all the comments, and I do spend time on them, and I appreciate them. And I just got asked for follow-up on this to go through the concept again. And it's really good because it ties in perfectly today. What we saw today was the market sell down, and we kept seeing it drop. And we kept seeing these names like AMD, and we're going to go through a bunch of names in a second here. I think it's really important to get this concept. This is free. Anyone can go there, wsj.com, market data, market diary. It's free. I would strongly suggest you look at this instead of listening to people on Twitter. And here's what I would say. Understanding what's really going on the advanced decline tells you a lot. I just said there could be downside. What you're seeing is a market that's telling you, we don't know what we're doing. And really important to get this. So we talked about this a week ago. That was yesterday, Monday. And here, take a look. Again, remember these from yesterday. Let's make that a little smaller. And we went through those on yesterday. Let's clean that off a little bit right now. Hit this button. Give me 1 second. Perfect. So this is what we had yesterday. And then this is what we have today. And I know this says Monday, but it needs to update. But obviously this is what we looked at yesterday. And we couldn't obviously looked at it if it wasn't. So when you're looking at this data, you can see here that the advanced decline was 552 to 2200, which means that you were, 4 to 1 on the decline. Where are you here? Well, you're about 2 to 1 on the advance. So today you had advancers 2 to 1. That's a fairly good day. Look at the volume, 789, 346. That's fairly good volume. Look at yesterday. So the volume, albeit it's a little lighter by very, very little, was actually lighter a week ago. This is really important to note, and that's why I strongly suggest that people look at this. If you look at the block trades were very clearly 2-to-1, which is very different than where you were yesterday. It's 2 advances for every 1 declining, where yesterday it was 3-to-1 declining versus advancers. Now, total volume was actually lighter a week ago than it was between these 2 days. Here's where it gets really interesting. NASDAQ has the same exact numbers. And then take a look here on the block trade side. So just so we're clear, 80,000 block trades. Look at the advance versus decline volume on block trades on the NASDAQ today. You think they're buying? They're buying tech, 9.6 to 9 million. They're buying tech today. And they're buying it, and the blocks are buying way over what we're seeing on retail side. And you'll be like, well, we don't know that. No, we know that because they're not doing blocks. There's another way that you can pick this up, but this is the most important thing that I probably have showed you today. I think we're still dropping, and I think they're going to shake the tree tomorrow. Now, whether that lasts or doesn't last, I don't have a clue, and you have more uncertainty than you've ever had. But we all saw the buying in the stocks today, and we're going to go through that in a moment here. But this is really important to get. That is very hard to ignore, that is the volume they have coming in. Now take a look at this. Now, we all know, or should know at this point, that there is the last hour of buying, and there is the first half hour of buying, or first hour of buying, but really the first half hour of buying. That's straight retail. And again, you can just see they update this for some reason faster, but they update the date faster for some reason on this. But anyway, so here you are at 93 to 40 in the first hour. Here you are 113 to 51. Okay, so retail didn't buy this morning because retail is the one that usually acts off the open. Retail didn't buy this morning. You know, institutions are never in a hurry. We know this through smart money, dumb money. So then we look at the end of the day and go, well, from 3:30 to 4, how did we do? Because that last market on close, 20% of all institutions done now is, I think it's even more than that, is done the last 10 minutes. It's crazy. Or last half hour, the hour, really. And then we look here. Well, you had more buying today than you've had out there. So you have institutional buying, and you can see that through this data very, very clearly. So are they positioning to own the market, or are they positioning to own a very specific sliver of the market? And I think that's what you have to focus on. Now, one thing I am certain of is that you always have uncertainty in the market. I'm just certain of it. If I know one thing, I know one thing after 26 years of doing this, that I don't know anything. So when you have a situation like you're rallying over and then you pull back, rallying over and then you pull back, and then you come to this level as you're sitting right in here, rallies over, pulls back, rallies over. You see where we're at here, right? To me, the buying in semis was pretty real today. And if we take a look at the SOX, SOXX, and you can see that we're down on a shooting star. You can always look at ESOX as well, which is the equal weight. And you can see that that has had a very similar move. And let's go take a look at the SOX again. And if you look for the nuances, and you might just say it yourself, and you might look for the nuance between these two charts. And maybe you'll say it, maybe you won't. I'll just do it one more time. And then I'll throw this in, and then you can maybe you can see if you can say it, right? Maybe you can see the difference. Let's take a look at that. What you're going to note is that if you look at the ESOX, which is the equal weight SOX, this is 50% of the previous bar. You're as close as you possibly can get on that. As close, meaning equal weight is as close. Take a look at the ASOX. Look how much more you're through that bar on the 50% line, which is marked and denoted right here. Look how much further through on the ASOX you are. And you're going to say I'm splitting hairs. I don't care. Watch when I show you next. So look at the SOX and the difference. So what are they doing? Are they buying the AI names, or are they buying the other names? Now in front of you is ESOX divided by ASOX, and that is the equal weight divided by the AI space. This is where it gets super interesting. You can take these two, divide them, mark it out to June, and I think it's like 3% where we are. Hold on. 262. So you're at 262 on performance, meaning if I shorted AI names and bought the analog names, just to give you an example, I'm outperforming. So what we're seeing today, and of course everyone's going to say that, AMD is AI and that's why it's moving. And yeah, okay. See these moves on AMD and the money's coming in, but take a look at Micron. Micron has been the easiest trade out there because it's the way it's been moving. So we had a great trade in Micron today. We had a great trade in AMD. And then you have to decide who you want to be in this market. Do you want to hold into this evening and God knows what happens? Do you want to take the trade? They're decisions only you can make as a trader. But I'm going to start doing more videos like that, actually, giving you how I think, and then maybe you could take value from that. And what I found helpful to create a framework to think. But so what you're seeing is you're seeing rotation. Well, how about Texas Instruments? Are they buying that? Yeah, they're buying Texas Instruments. How about analog devices? ADI. Yeah, they're buying that too. Okay, so then you walk through that. Well, how about NVIDIA? Inside day, which really just does not make me happy. I've been happy before. It doesn't feel like that. And then AVGO is going sideways, which I own as well, and it's going sideways. What are we seeing? We're seeing inflows into cheap. And when you see it going in, you can't unsee it. It's like, look at it. KLAC, Semiconductor Capital Equipment Manufacturers, they're ripping out. This is really important to get. This does not happen in a recession. Lam Research hits a high and then backs off. Like, did anyone have, Lam Research 52-week highs on their bingo card this week? Because this is when it was all going to zero. Remember all those people that were showing you that negative 4% Atlanta Fed, telling you the sky was falling? Where are they now? In their basement, eating Hot Pockets. So what you want to do is focus on what is actually going on. And bottom line is, this is where the money's going. And you can say it. Now, maybe ASML doesn't finally get through. Maybe it does. But right now, that money flow is going there. And I think that's what we're seeing more than anything. What I'm starting to realize, too, is the haves and the have-nots. And I'll show you what I mean by that. Take a look at this CRM. Absolute pig. Look at Workday. I think we're seeing disruption in the CRM and in the Workday. We're going to cover that in another video, probably on Saturday's video. So subscribe to the channel, click all notifications. But what I think you really need to focus on here is, why would this be going up? And why would they be buying the semi-cap manufacturers if this was something that we didn't have to worry about? What you have to do is decide who you want to be. So like when we did this trade today on AMD, it was simple for us. It's a very simple trade. We saw it breaking out, and I was just watching. We watched the retest and we couldn't gap fill, came to a level, flipped key level, and then it just became trim, trim, trim. And then you have to make a decision on what you want to do. For me, always, when I'm doing these things in your day trading, when you start seeing these negative divergences that people say they don't use RSI, that's okay. They don't have to. But see what's here? I mean, you see the negative divergence? Like, it doesn't really get more obvious, like really, really obvious that you have a problem when this happens. So this allows people to make that decision. Do you want to hold and go for the ride, or do you just want to get out of the trade? Here, take a look at how we entered this. The way that this is building, super interesting. The volume's actually increasing. And I got tons of buying in the SOXL today, like tons. You can flip here. And if I can get a close like that, you can actually go off the inside bar that the SOXL flip. Yeah, it's probably going to go. And I think AMD is going to go again too, quite frankly. I'm going to buy it. I bought it. I needed the close, but I'm not going to wait for the close. And once it flipped there, I'm pretty much done. All I got to do is hang here for another minute and a half. And then the close on that's probably going to be right under there. There goes the AMD. So that's gone. You can move the stop to break even. You can leave it on. You can trim it. You can do whatever you want with it. Once you're over this level, your real first target is going to be here. And I'll just mark it off. You're going to be that 131.71. You're up well over $1. You can sell it and move the rest to break even. You can do whatever you want with it. Your goal is not to lose money today. That's your total goal on something like today. So when you see something like that, really what you want to do is just go, okay, am I willing to go to break even on it or to take that loss? If the answer is no on it, then you just want to take what you can get, move on with your life. That's really how you should be viewing that trade. See how you're hanging here, like you're not breaking down, right? It's the drip that you're interested in. It's not the hit and reject. It's the drip. See how it's getting tighter and tighter? See the market structure? Like how this is getting tighter all the time into there? That's what you're focused on. I'm not doing much more. It's watching. I would not go past break even on anything. And if you're not willing to do that, then you start trimming. And this is exactly what I'm talking about, where you have to make a decision. Hindsight's always a beautiful thing. Everybody wants to be a day trader until it's time, and then the stock goes crazy. From a swing trade perspective, do you stay in it? Do you not stay in it? These are decisions that only you can make for yourself. No one can make them for you. What I do find really interesting about this market is it's very clear that you have certain pockets where the money is going. I also think that you have a lot of uncertainty out there. And the question is, what names are going to get bought? Are they going to buy the XLF tomorrow? Are they not? I personally think that looking at that semi space on any pullback tomorrow is going to be huge. What I would really be very cognizant of is this kind of stuff where you have these names and they're the old Wall Street, bets kind of guys that are trying to run this stuff. You could see it today. And we pointed it out very early for people in the community that were trading this, where this didn't have a chance, didn't have a prayer. And you could see that it didn't have a prayer. And you had a really nice short in here and it was super easy, but I'll just show you it. You can see the test. Here's your rally, pulls back, test, watch. And you just look right at it. I mean, you're literally staring right at it. Makes a new high, look where you're at. So like this kind of stuff's so easy because it's literally now it's pattern recognition. Once this RSI happens and you're over like that, it's just pattern recognition. And then you're just getting out of the way. If it doesn't work, it doesn't work. But risk versus reward, it's there. And as long as the RR is there, you're batting over a coin toss on this kind of trade. So anything like that gives you edge, and that's really what you're looking for. I'd be careful of like the names that retail's trying to prop up. What you want to look for in these kinds of markets are things like this, like CoreWeave. See how CoreWeave broke out? That's not because it's the cat's pajamas. it doesn't really deserve to be where it's at, right? We all know this, but it doesn't matter. It's still doing it anyway. That is not institutions going, I have to buy. That is short sellers getting squeezed. And that's what you want to be cognizant of. What is actually moving in this market versus what is not. Tomorrow is going to be absolutely crazy. So especially remember that you also have to deal with what? The holiday on Thursday. That's it.